Hello and welcome. It is the 10th of July, but it's pretty much the 11th. And I'm going to upload this probably right around when I go to bed. But let's talk about ratio trading and even how a market looks. I'm going to go back in time, buy low, sell high. There's not much time to go back to, but it's just obvious looking at this why it's so profitable trading on this mechanism, especially if you're able to have access to the markets 2, 3 times a day, let alone even once a day, is very good. And this is just the daily time frame. We're only going back to April 22nd. But the price action rising up to 22 and a half. And what's this low? It goes down to 14 and a quarter. It's down a third of its value. You're going to get some of it back because it makes a lower high to 18 and change after 14 and change. $4 or 4 point differential. Close to, we'll say 25%. A little better. So opportunities to get some of it back and then getting a little bit back in here again. And this time, okay, now you're getting some good ones back to this previous high. Buybacks in here, sell up here. You're just going to be buying down here, selling up here. Maybe a buy. And oftentimes in trading markets, when situations like this occur, volatility becomes microscopic and maybe you don't get as many trades in. That's just part of the game. There's going to be busy times and unbusy times. It was pretty busy in here. It was pretty busy up here. Pretty busy up here. And possibly intraday you sold here, bought back, and sold again. And then bought back and then sold again. Maybe you sold here. Maybe you didn't. Maybe you missed a sell. And that's going to happen in times too. Maybe like, okay, I want to trade at 26. Yeah, it didn't quite get there. But even still, even if say it was because you say sold here last time, again you get your buyback here. But after this support, it didn't support it that well, but it technically did. And then there's another leg to possibly buy in. And even if you missed this buy, if you bought here, you got another resistance play here. And then maybe you hit this bottom again. And maybe you sold this again, maybe you didn't. But if you missed it, you had this other opportunity. And just even now you have the opportunity at 24.31. We'll see how we go within this market structure, an ascending triangle, and a lot of powerful resistance. And there's a lot of traders that care about Litecoin and Atom together. And look at this chart. And I'm sarcastic. I might be the only person in the world, I don't think so, but I might be the only person that actually just trades this exact cross back and forth. Haven't been trading it as much lately, but obviously we can see why when we have the moves like we do. Now, how do we explain this move here on the daily time frame? Can we see it on the 15 and it's one of these little moves. Yeah, Litecoin had an interesting 1 minute period. That's what happened there. So the only way you could have ratio traded like 27, 28 is if you had an order into, I think it was sell Litecoin, which is an interesting strategy. You can do in ratio trading. If I'm looking to sell, say, Litecoin for Atom, I can put a sell order for Litecoin in at a whatever good price, like much higher than what it is. And in the case with that, if you had like 5, 6%, like 4% or whatever it happened to be with Litecoin that made it to get to that level, I can't remember, it might have been even like 8%, 9%, but whatever it was, if you had that high number in and it sold, you could have just bought the Atom and it's like, oh, I got a trade offer at like 26.59 or something. Sweet deal. And now you can have a buyback nice at 23 or whatever. If, of course, but that's just, of course, that's how you would have got that particular move. So when you look at the situation for this play, it was instant. There was only one mathematical way to get it. And again, as I already told it how it is. But it does look nicely how it's just having this nice little breakout above. We'll see if Litecoin has a phenomenal move over ATOM. So, just for fun, What I want to focus on when I put my lines in is price stability, meaning, well, especially that last move that just happened in here. Because there's a good chance, say for that last move, I didn't get it because I didn't have my sell order in for Litecoin. And sometimes you need to have a buy order in for one and all this type of stuff. Let's just say you start trading this at 20. Let's put in a line and let's say you're looking to make a trade there and make a trade there. I'm not going to write any of this stuff down. Just realize that every time you get flips back and forth, it all works out for you. So in here, this is an interesting spot. Because how would this play in reality? That's what I want to look at. You could have alerts going through. You could have been beeped. What time would this have happened? Let's just assume you don't care about. We'll just for fun, we'll give two segments of times that aren't going to count. 12 to 8 o'clock, or 12. No, I want to do. Yeah, 8 o'clock. 12 to 8. And we'll do 4 to 8 and 6. No, we'll just do 12 to 8. So this happened at 4 o'clock. And I didn't realize that when I was looking. I just thought I got to put that in there. So 8 o'clock, you wake up and you're like, oh, I got a better move. I was hoping to get a ratio at 1810. I wake up and I see it's 1574. That is sweet. So now I can even look to sell at like, maybe I want to sell here at, well, 1574. I'm thinking even 17 change. Say down here. And if I bought at 15, whatever, we'll just say, we'll just wait for it to go down to like, say, high 13s. And it would have hit it at noon. So the question is, I talk about price stability now. This would have been a real timing aspect at this stage. Would you have been able to get that price? Because what you would have had to do with this market going down is ensure that when it was down at this point, you would have been able to sell your atoms. We will assume here that you did. Well, now, if you bought at 1380 and we're looking for noticeably more than 10% even, that would be add a 1.5 to it, so 15 and a third. So we can see that there would have been price stability in here at the nighttime where maybe you would say make a trade here. So let's assume you sold here. Again, now you could put a buy order for that exact same spot. And we're not putting a buy order in. We're just going to have alerts to the market. And there we have it on, say, 1 o'clock in the morning, but you're sleeping so you don't know this is happening. And you wake up at 8 o'clock. And now you got the decision. This is the spot what's going to happen here. Do you want to take a little weaker of a trade at 9, 10 o'clock and secure it? Because that's that gamble, and you can see if you did and you waited to get, you would have had that trade successful. Regardless of the fact, I'm going to move this up to the next buy order here. So if you're buying at 1740, what's the difference from 1740 to 15.8? Well, that would be like 1.6. Okay, that's about a good 10% or so. And if we sold at 1740, another 2 on top would be like 19 change. So let's just put something there. And here you would have had that spotted. Maybe it's, oh, you're waiting, and you didn't get it because you're waiting for the number. You're not going to take that number, or all the other ones we're going to talk about, like this one here, are just going to work out to be worse winners, meaning I'm going to buy at 1637, and we can see here that again, this is an interesting spot. It's price stability. Did it come through? Did it not? And as you can see, it doesn't really matter because 16 went up to 1785. So that was like 185. Well, you know what? That's another interesting spot in here. Because if you got it, if you didn't get your buy order here, you most certainly would have got it in here. But in the situations in which you did get it filled, and you're looking for 10% moves. Well, what's 10% on high 15s? Well, $1.60 or 1.6. So if we had 1.6 to 15 high, that gets us 17 low. and this price action goes to 17 high. So again, it would work out, were you able to get this price at 20 hours? Maybe you did, maybe you didn't. If you did, it worked out successful because you were able to buy again. Obviously, when we look at this from this standpoint, if we're looking for 10% moves again and it's at 15.8, well, if it's at 14, it would take a 180 to get there, so you could be buying above 14. This would have been a tough one to buy. So if that's the case, you'd be like, okay, we'll just have to say there was just no way you were going to get it because it came down here to 1406. But if we had our last transaction in here at this 16 level, and we had two to that, would be like 18. That would be over 10%. So you can put this in at like high 17, and then we just go through time. And now we go a few days where nothing happens here in May. May 3rd, 4th, 5th, 6th. You're not trading it. Now I'm going to May 8th. And here we have it. What time does this happen at? 4 o'clock. Now you wake up at 8 o'clock and you're going to be getting in on the trade. But we can see what's going to happen is this is a market you're probably going to be paying attention to through most of the day. And there should be no reason you do not make this high if you're a day trader and you have the time. Because this is happening at 1500 hours. But what happened at 1400 and what happened at 1300 hours? Well, what happened was the market was rising and maybe a few of your other trades were coming through and you made it. Great. Or you made one and you're going to do another one. But you see, you traded at 1767. So let's add 2 to that, high 19s. Okay. So as it's going up, this is a spot where you're like, interesting hour for you at the 1500 mark because you most certainly are making a trade. And you probably should have made another one. Hopefully, if you are playing this game, that you were able to get more coins into the exchange if need be, or you already had them in there. But one of those things as a ratio trader like myself, you're going to be short stacked of a coin, you're just going to have to deposit more in. But during this point, you see it's going up nice. And now, of course, I'm not going to do it, but you'll be short in the time frame, even as low as the 1 minute. And then, and if it's here, well, it got up to 24, so it had, or 23 and change, so it solidly had another 15 or so price increase. So it might have worked out how much time you had when it got to 22. A lot of it would have been because it got to 24. If you had the coins, you should have probably easily got it because like, oh, you see it there, it's at that level, you want to sell at 22. And maybe it took you 20, 30 seconds to get the sale. And if you're super fast, well, you're going to get 22. But if you're not as fast, maybe it was going up and over the next, say, 49 or 85 or 200 seconds after that, it has this big move and you're fast. You're like, oh, God, I got my trade. And then you see like, oh, my goodness. And this was, of course, LITECOIN going up or Atom going down big, either or. So you're playing it based on that. But either way, you're ready to sell LITECOIN in those situations. And you do, of course, exactly just that. And then if you get it in, there's your retracement back to that level. So we'll just assume that you were able to have a last trade. We'll just assume you had a buyback somewhere around 18, 18 and a half. So at that stage, we're going to go like high 20s, 18 and a half, maybe low 21s. So in this case in here, if that's the spot, we would have sold some more. And I'm just going to go like this to get this back up. And well, now you're going to need buy orders somewhere down here. Maybe you have a sell order here. And I can play for whichever volatility, but volatility, this is a possibility. Do you get it? Maybe you do, maybe you don't. Either way, we can just see, and I don't need to do this for too much longer because you're getting the big idea of what's happening. But mathematically, let's do that next after we're done looking at this because you have this higher high, higher low. If you're looking for 23, like we can see here, at least at 2 in the morning, but if playing at that time anyway, if you were playing, you had stable prices of 23, high 22s, 23, and yeah, high 22s for this whole period in here. So it was easy to get that number. And if you did get it, it goes down to 20 medium, 20 and a half. So that's a differential of like too low. So you're looking at like a 10% move. Just part of the basics towards it. But now, as far as the mathematics is concerned, I'm just even going for a play of like a little over 10%. Let's take a look at that. And I got this to the current timestamp. So I can just take a look at this on the 1 minute. Oh, is there anything I need to look for as a trader for this going up? Well, over the last few minutes, sort of, it's got up to this key level of resistance and it's holding and staying within it. That we could be poised for a good move. I think 4 minute I should have I might have an indicator on here, but I seem to always put them on the 4 minute. Do I have one ready to go? I do. My indicators are far ways away. So I'll get indicated here that, hey, Derek, time to ratio trade at 25 and change. So up in here is not good enough for me. Okay. So then, let's do the math. You play a trade for a little over 100 units. I want to use simple base numbers just to make it easy. And I don't need this line in anymore. Let's just drop it. So you end up selling, let's just say a ratio is a 100 at one point. That was your last trade. And let's say you made a trade where you sold 10 of something to get 1,000 of the other. And then the market goes up a little over 10, let's say 100, 112. So now what's happened is the better coin has went up in value. So you would be selling this one in here. Let's just assume in this one you gained 10 last time and you sold 1,000. Now if I just take a good percentage of what I gained, but notice something noticeable back. You're like, I'm going to sell 9.7 of them. Well, how many of the other coins would you get back on a 112 to 1 ratio? Well, let's figure that out. We can go 9.7, and if the ratio is 112, get about 1,086. Okay, not bad. Gain of about 86 on this and 0.3 on this. Now let's just assume that we have going back to where it came from. It comes back to 100. So now you're just going to flip it back. Okay, well, this time we gained 1,086 and we lost 9.7. Let me just say, for example, I want to go 1,040. We're going to lose. Which means it's an exact gain of 46. And I don't need a calculator to tell me that I'm going to get 10.4 here. Which means I'm going to gain 0.7. And that is, just the more of those you can flip, the better it is. It's going to nicely increase your range. But let's just assume something wild happens now, where you have a wild move. And it goes up to, say, 135. You wake up, it's like, sweet deal. Now we have a different ball game here, because I would have been looking to sell at 112 again, and then maybe around 125, 126, and then close to 140 maybe. So instead, I got this here. So there's definitely going to be bigger numbers being involved here. Now, one thing that might be of note, at least if this was what I was doing, then I would be, like, if I was flipping 1,000 for 100 on this move, then there's a good chance that at the time I maybe have, say, we'll just say something like I flip like almost 10%. Let's just assume I have 11K at the time, about 11K-ish or so. And in this, you're talking about like about 100. Well, if I got about 100 at the one that's at 135, that's the one I'm selling. So now I have to ask myself, how many of those do I really want to sell? And there's different, and it depends on my strategy and different ones. And each crossing I have can be a little different than the other. There's a big difference between how much I would sell on the Theta Litecoin cross or and the Litecoin Bitcoin Cash, which are relatively similar, compared to say the Theta and the Gold chain. I mean that's more aggressive. And the Gold, if I was doing that with the Theta Gold chain, a 35% move comes in. Probably I would consider 30 to 40. Oh, very aggressive. That's kind of overselling though. So I would consider maybe realistically for just a standard, not too aggressive, not too tight. Maybe that of around 25, maybe of the 100. So you'd be down to 75 or so, whatever. And then this gain, hopefully this gain got you to the point where maybe you're at 106 and it makes it easy. I don't know. But we'll just do say, you do like say 25. So 25 go out. Now within that ratio, we'll get our calculator up again. If it is 135, how many of those coins are we going to receive? We're going to get a lot. 25, and we'll multiply this by 135. That's 3,300 and change. We received 1,000 last time, and I would have owned like about 10,000, so now I own about 13,000. Okay. So if the market keeps going up, then I just have to manage my Litecoin or Litecoin, whatever. I'm just saying. I'm just because I got Litecoin on here, I suppose. Whatever base coin this is that went from say 106 down to say 81 now. If this goes up, now I'm instead of 10%. That one of the first things I would do is I'm probably going to increase the minimum base percentage. If it was 10% before, I'm probably going to increase it to like 12, 13, 15, or find some sort of number after that. So that would maybe, it's got to at least break past 150, 155, 157, you could say. And then you'd have to manage how many you sell, because if this just keeps going up and all you're doing is getting sell order and sell order and sell order, depending on your strategy, if you're doing this more aggressive one, then it's going to be you're going to have a lot of situations where you can sell out. But now instead I'm going to talk about the comeback to key levels. And let's just assume that, now first of all, what would be nice, if it just says as a quick move to 100, and then you could, then I'm not going to write this down, but if you had a come back to 100 area, then I could have an extremely amazing flip back. Because now what's going to happen is, well, I gained 3,300. I'm going to maybe flip back like 2,800 of them. 27, 2750, 2850. And at 2850, that'd be 28 and a half on the other side. So, I mean, that's a good gain on both ends. So that's something I would do if it went to 100. If it was an extreme move and it goes down to like 80 or 75, then I got to even be more aggressive, and I'm going to be selling more than of the 13,000 that I got. Maybe I'm going to sell 4, 5, 6,000 of them at an aggressive level, because I realize a lot of times in time, as long as I keep managing the amount that I sell, if it keeps moving in that direction for me to continue selling, that I could probably survive many legs in one direction is basically one way I'm going at it. But let's just talk about a normality that you have a decent sized pullback. And so we had the 135 and the 20. So let's just assume it's like something in the middle. So like 116. Well, what's the volatility on that? Differential is 19 points on 111, on 116. So we're looking at about a 13, 14% move, it looks like, maybe. Noticeably well over 10. So what I don't want to do is I don't want to sell around 3,000 of these. And one of my general rules, if I'm playing, for example, I mentioned that I'd have like, say, we'll just say I have like 13.5K of these things. So if I'm playing this aggressive strategy that I like to play, I like to do around that 10% number, You know what? Even just get a little fun, like do like 12.5% of what you own, and then go from there. And meaning, if there's a 14% play, well, then now you think about selling 17, 18%, something like that. If there's like a 50% move, maybe you sell like two-thirds of what you own or half. If it's a 70% move, maybe somewhere between 70 to 100% of what you own. Just those risky plays to try to get some amazing volatile moves on the pullbacks kind of deal. But on the situation of going to 116, we already know, as we stated, the movement was 19. So we'll just assume that's like a 14, 15% move. So at 30, or at, what was it, 13,000, if I'm looking at even 13% on that, or 30%, or 13, or for that, we're talking about 50, maybe 18% or so. So 20% would be like 2,700. So noticeably lower than 27. That's what I'd be thinking as a trader. So maybe I'm going to go about 2,600. So 2620. Let's say that's what I did. Of course, now I can do the calculator and see what happens when I divide that by 116. That would work out to 22. Okay, that was earlier from today, from another thing that I did. What was I trying to get? My calculator, yeah. 22.5. Notice the math here. It's really interesting. In this end here, I lost out on 2.5. And I gained, well, easy math is 380 plus 375 because it takes 380 to get this to make it look like a 2, not a 7 here. But it takes 380 points or numbers to make this go to the top of the hour, top of the whatever, the top of the thousand. I don't know what you would call it. But to get to 3,000, it takes 380, and this is 3375. So add the two together. That's 755. So we ended up gaining 755 for 2.5. Let's do the math there. Ratio is 302. Wait a second here. We're playing with ratios of around 100. Yeah, that's just what the other profit works on it. Okay, so it goes back down to 100, say. Move back down to 100. Well, you had 13,005. That's out of play now. So now you would have taken 2,600 off. So now you're like a little under 11K. And you got a bit more of those other coins, 22 in it because of this here. But I'm going to ignore that number because this is the last one I'm going to do in this exercise. So the move from 100 to 116 would be that of 11.6%. Just your standard stuff. So a little over 10% of about 11,000 is like 1,100. So maybe you go like 12, 1,300. So in this case, maybe I would do 1,300. And I don't have to write this down because 1,300 means I'm going to get 13. So 1,300 of that coin out, 13 up. And the more these up and down swings happen, what's going to happen in these same situations, if this thing chops back and forth several times and we're back at the same ratios like in here, if the exact same move happens where it goes from 100 to 135, I ain't going to be selling 25 of them. No, I'm going to be selling 32 or 33 or 34 of them because I've increased my portfolio of both coins over those maybe like 16 trades or however many trades later it is. It goes down to 70 back up to here. It goes up to 200 and back down. Either way, I'm going to have a better portfolio because the mathematics told me, say, that at 106 to do 25. But now if I own, say, 149 of them the next time it's there, or 152, then the number percentage is going to be increased. So instead of 25, maybe it's 31 or 32. But even when it's 29, 30, it's showing that the mathematical system is working. Now I'm able to show these charts with the it's a super premium account. It's cost $25 just for 1 month. It's not cheap. But with TradingView, you can take a look at these markets against whatever crosses. Just against Bitcoin, against Ethereum, you're going to get the idea. It's just I noticed that the doing stuff like Litecoin and Atom, Matic and Theta, any type of those types of crosses can have some very good and better volatility that's going to do more for your trading ratio, especially if you're like me and you're looking for like even 7.5, 8, 9% moves. And then, of course, trading the allocation size accordingly. So I'm just giving examples of how I do it. How you do it, that's up for you to figure out because there's going to be, hopefully, I'm hoping there's a couple people that can actually kick my ass and saying, hey, this is the way you do it. I'm hoping at least one of them explain it to me, but whatever on that. And if you do, that would be awesome. There's just so many things that are like the best gifts in the world. Obviously, I have my gifts for like Bitcoin and Litecoin, but some of the best ones aren't that. And things like that. Like, oh, here's, by the way, I got a spreadsheet portfolio like set up and stuff like that. I mean, oh my goodness, that's so amazing. Or here's this website that's got this. I think this would be great for you. I've had somebody give me a website that got me a lot of great data to download for different markets. A little tricky to do different types of stuff because of uncertainties of, like, say, ratio trading. I really can't get data for the Litecoin and Atom together because of unfortunate technicalities, but I can get it for against Bitcoin, Atom and Bitcoin, and Atom and Binance Coin, and maybe Litecoin and Ethereum. I can get all of that, whatever their crosses are, and I can get good data. But yeah, I get someone tells me the information for it. Those are just amazing things to get back. Of course, there's ad revenue, but a lot of this is just to help people who really want to get into the game. Because I'm stoked the fact that I was able to come up with a trading strategy in which that I feel can be done for not only just regular people traders who want to be active like myself, but even those who are unable to allocate that much time into this type of venture. And thus they can maybe check once or twice a day. It's amazing if they can do two to three, especially on the days where things are going active. And maybe you only want to do one or two pair trades, which oftentimes, if you don't got that much time, that's the best thing to do. And instead of playing 10 different crossings for a $10,000 like venture, have one crossing for a $10,000 venture kind of deal. And and then you get to the point for that where you're not going to play for these 12% moves if you're looking once a day. Maybe you want 20 or 22 or whatever. And you take, or even 15 or whatever it is that you're looking at getting. And yeah, that's all about that. So I'm hoping mathematically that the following things happen. Number one, that the whole crypto game system works out, and these coins I talk about, these not counting like the ones like Skycoin and a few other ones that are just low stakes, that they work out. Mainly the Litecoin, the Bitcoin, the Theta, the Bitcoin Cash, the DGB, all those higher stake coins that I own, that they do well. That's what I'm hoping ends up happening. To recognize when a dartboard rally comes in and then to execute as needed. I'm always going to do stuff like that. But to have these things chop back and forth in the directions that they do, and if they can do it into this time frame here, like 2022, 2023, to the point where the extreme cryptocurrency levels like Bitcoin 250,000 comes into play, then that's going to work out towards a huge advantage. Because I'm going to be able to accumulate a lot of these coins on back of these trades. And then when some of the superior dartboard rallies happen, meaning 700, 800, 900 days from now. And there's going to be some small ones along the way, and I'm going to take those trades as well, given the fact that, well, I'm like I said, I'm looking for 10% moves. And I want to get better on organic levels when the market conditions give them to me. I wake up and, oh, this is up 30% from that. Great. Or 50%. Or market conditions show the volatility. Yes, I took a 10% sale. Then I took a 16% sale. Okay, this is things are going wild with this whatever coin. Now I want to see if I can go for a big sell play. Stuff like that. Just recognizing the message of the market is one of those key things in referring it to that level. Now, what I hope happens, and unfortunately I don't, unfortunately as well too, and it's is the precious metals market. See, ideally, what would be nice is along the way, when you get some nice moves in here, is that the markets, and we're talking like the gateway levels, I think is the way I should call it, which is levels between 20,000 and quarter million Bitcoin or 300,000, whatever. But my big gateway level is 60, breaking above 60,000. Meaning, oh, I want a profit take here. So as I mentioned about like the big moves happening, maybe say sometime in here in like 2022 or something, I'm hoping the gateway level happens in like 20 later this year or 20, like right around here maybe, sometime in 2020. And then okay, now I can liquidate into precious metals. Now I'm hoping that gold can stay under $2,400 an ounce. I'm hoping silver can stay under $20 an ounce. So I don't mind, okay, good gains, like moderately decent gains. Oh, silver goes from like 15 to like 19. Okay, so I'll get uh, 15% less silver now or whatever. I'll get like 20% less gold, or it's going to cost me that much more in Bitcoin still. Either way, it's going to be cheap because, oh, silver goes up like, say, or gold or whatever goes up like 25%. Yet my portfolio might be doing like 9, 10, 20, 40x wonder moves that this is part of that transfer of wealth that I talk about. Oh, I'm able to get it good. And then if you're doing stuff like buying into gold and silver, these prices, you're transferring into something that's going to do that same thing over again. Oh, so you bought gold at, say, I don't know, say 1947, back at previous highs, 1852. You bought silver at $20.67. Oh, later on, gold goes from like 5,000 and whatever, or even bigger silver. You bought it at 20. Now it's like 1, 2, 3, 4, 5, and okay, now I can flip and get more transfer of wealth. Yeah, that's just yeah. I bought like say whatever. Say you bought 100 ounces, or you bought even 10, whatever. So if you bought 10, we'll use that example. Okay, now we got silver going up big. Now you take a couple of those ounces of silver. Say silver's at like say 350, you now get 700. You take that 700, you go to the grocery store, you buy some groceries that are like 25, 30% higher in price from say today. There's your transfer of wealth. And those other people not into the gold, silver, cryptos or whatever doing that type of stuff don't get to get any of that. And maybe at the same time you're getting a double-edged sword. Maybe at the when the silver does go to 230, you're at the point where like holy crap, cryptos are going way up too. It's like maybe I should just buy silver more or whatever. But you can turn cryptos into that just do so many different things that can come available in situations like that come into play. And to understand the mathematics to why, if you got a decent sized portfolio into precious metals and into cryptocurrencies, to how you can really take a big advantage of that transfer of wealth and literally get pennies on the dollar for things. As far as when you equate the math to the examples that I just talked about, you base your portfolio value today, how much it gets then, how much you have to, all that type of stuff. But in an example there, when you look at, okay, here's a spot where my portfolio just did a 35x move. I mean, wow, that was incredible, we'll say. And next thing you know, it's I'm just gonna pull whatever out, just a little bit, but you got a lot if it's 35x. So whatever, maybe you are pulling an okay amount out. But the bottom line is, everything's 35 times cheaper than where it was. Now adjusted for inflation, maybe something goes up. Oh, now it's 27 times cheaper. Well, if it's and then we'll do 25 just for easy math. Well, if it's 25, that's 1/4 of a dollar. That's 4 cents. That's pennies on the dollar. So now it's costing you like 4 cents for every dollar of whatever it is that you're buying. And of course, if precious metals go up, maybe it would be a totally different story because, well, it basically might have like went up, whatever. But you're buying stuff like your gas prices. Say in Canada, you're paying a buck 20, was buck 25 a liter. Now it's like say a buck 75 a liter or whatever, a decent sized move. Well, now you're talking about playing like we'll just I don't know, we're talking like 15 cents, 14, 12, 10 cents liter kind of prices, and that's how it really does feel when you're able to be able to do it. But back to the whole math aspect and why you're such getting such an amazing rate. Who's paying for your gains? It's a transfer of wealth. There's winners and there are losers. And of course, you'd be a winner there. But the people not doing these, getting into cryptos and stuff like that, and not getting this amazing pay raise and seeing that they're having to pay this, well, that's an extra bit more that they're paying for if you look at it from this perspective. But how many people are into the whole cryptos and silver thing, and actually even on that extent, using it to do it on the transfer of wealth? As far as actually using it to sell, because hey, it was great. I was able to buy 100 of this one coin that kicked ass big, and now I only need to sell like one of them or two of them or like hardly any at all. And not only that, but I turned the 100 into 140, just flipping it back and forth with another, all that type of stuff. So you sell like 10 of them. It's like hardly anything if you're 140. I got 130 now, maybe. Okay, great. And those 10 are worth a lot. And then here these people are like, oh my goodness, it used to cost me 30 bucks to do it. Now it costs me 41.10. Well, that 11.10 portion of that goes in there. But what's the ratio of people like you versus people like them, if you want to look at it that way? And I hate to say it in that terms, but it's just for lack of better way of putting it. I guess that's because that did sound bad, but I'm just for like another way of saying for one person that does it, there's like dozens and dozens and dozens of people that are losing on the transfer of wealth, and for every $1 they lose, you're gaining multiple dollars because you're getting it from like 30, 40, 50, 60, 70, 80 people that way. Because if everybody was into the crypto game, well, the price explosion to get there would just be phenomenal. That's just not going to happen. And in that right now, you're in the early adoption stages. And again, the way I trade this is an example just to try to increase your portfolio, wait till it gets there. And then the situations where you get to the point where you can almost say, like, literally, you can be like talking about 500x gains. You can literally be now talking about micro pennies on the dollar, like decimal pennies on the dollar. It's going to be like pennies on the $10 is now what we'll be talking about for things. And these types of gains happen. Now, how do you get 500 plus X gains? Well, one of the big ones is just being able to. I mean, if the one problem that's going to stop you from getting that is if you're withdrawing along the way, then that number should technically kind of go down because as you go further, you just have less of an investment to work higher with. But there still is nothing wrong with that because I believe that's a good play to do anyway. And even then, maybe you'd get like 4,000 X gains and you still will end up getting like 500, 700 because of that. Those are realistic. 4,000 X gains? No. Yeah, they can happen easy, especially if your swing trading works out phenomenal. That just makes it that much easier. And in situations like that, if you're talking like pennies on the $10, that means you're talking $1 on the 1,000. So things that used to cost $1,000, and we'll just assume that inflation works out, so you're literally getting that number. So things that cost $1,000 now cost you $1, which means $100 for 100,000 or 1,000 for a million. So now it's like buying a house for $1,000 or buying a nice mansion for $4,500. That's pennies and micro pennies on the dollar. Thank you for tuning in. Have yourself a great day. Bye bye.